and that is the #1 free indicator you can use right now to help you when it comes to finding really good entry points in the market, and that is a simple moving average. So here's the thing, guys. A lot of the traders, the thing is when I'm trading myself, I always want to be getting in on the next move, right? On the next move. So how does the overall markets actually work, right? How do they actually work, right? They go through swings, they go through phases, right? So I'm looking at gold right now. This is a gold chart, and I have a 52 moving average. Is it simple, John? Is it exponential? Who cares? It's simple, right? It's just a simple moving average. John, why 52? Because my mentor used it. John, why didn't you use 50? You can use 50. John, can you use 60? Use 60 if you want, right? It's just a simple moving average, right? But the thing behind this, what I'm sharing with you right now, is where the rubber hits the road, right? This is where it gets really, 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 really awesome. So for me personally, I want to be getting in on the probability of having the next move in that direction, right? In the next move. Unfortunately, the uneducated and most amateur traders, what do? Is that they wait for them. So how does the market actually work, right? Let's actually think about this, how the actual market works. And this is all markets, right? All markets, right? So I had someone on my videos the other day saying, it was the other day or a while ago at least, saying John's trying to do technical analysis on the crypto market. You can do technical analysis on any market, because who do you think's trading these things, right? The same humans and robots are trading all markets. So therefore they're going to make the same type of patterns. Right? We know that. Anyway, so looking at how the markets work, how do the markets work, right? We go through these swings and phases, right? We go up, we go down, we go up, we go sideways, we go up, right? So we go through these, that's a bull market there, right? Or if it goes down, up, down, sideways, and down, right? So bull market, bear market, we understand that. Unfortunately, what the uneducated does and do, and you'll be able to see in the next section when I talk about my #1 trading pattern, why this is so powerful on the back of what I'm saying here, is by utilizing the moving average, is that most amateurs, the reason why they lose money is because a lot of people have this herd mentality. They want to see everyone else in there first, then let's go. You do that in the market, you're dead. You want to get in there when no one's getting in there. Because guess what? When no one wants to get in there, that's when it's a good time to get in there. But then when everyone is in there, guess what? Now you want to evacuate and get out of there. Now, the herd mentality is also like these swings, right? So what happens is that after a while, when the market goes through these bull markets through here, these bull moves through here, what ends up happening through here is that they wait for the price to rise, and now they go, oh my goodness, the market's rising. I better get in now before I miss out on the next big move. And then they get in up here, not knowing how the markets actually work. And that means after a period of time of going through a phase in the markets, and it doesn't matter what market you look at, it's going to come a period of time where you're going to get this correction, a pullback, a counter trend to what I call a refueling phase, right? We have to refuel it. This is a refueling phase to go for the next leg up. This is a refueling phase getting ready for the next leg up. So unfortunately, because so many people in this world have this herd mentality, right? I want to see so many people doing it first, and then I'm going to do it. You do that, you're gone, right? You're dead. You're dead. So the professionals like myself, what do? I am waiting for not everyone to get in there. I'm waiting for this correction. I'm waiting for the pullback. I'm waiting for the reset. I'm waiting for the refueling phase, the correction, and I'm getting in here. I'm getting in just here before we see the next leg up, right? I want to get in there. That's where you want to get into the markets there. So the thing for me is that I'm always looking for the identification of where is the market right now. Should I be in? Should I be out? If I'm looking for a good trade, remember this is trading, guys, right? I'm looking to get in and hold for a couple of days, maybe for a week, maybe even if it's a longer term trade, I might be in it for a month or two, right? So that's the type of, I have two different types of trades. Level one for me is more like I'm probably going to be in it for maybe a week or two. And then level two is more like, if it is a successful trade level number two, then I'm probably going to be in it for a couple of months, and it's going to be a really big profit. So that's the type of trades I look for. So, but on the back of what I just said there, guess what? Now, when I'm actually trading the markets, I'm looking for these points here. So, and the same for the downtrend, right? Same for when we have this downtrend through here. So many people will wait to short it, and as it's been going down, after a while, then people want to come in and short it. This is why people will lose money in the stock market and trading in general, because they wait for the market to do its thing, go either up or down first. But even if it's in a downward trend, we're going to sell it, it's going to go down, and then inevitably we're going to go through these counter trends, these whipsaws, right? These periods in time in the markets where we're refueling. So what you want to do is you want to wait for these refueling phases and then try to get in here. Try to get in here, right? Not after it's done that. So the reason why I brought that up in today's video is because if we look at how the markets actually work, even by looking at this gold chart right now, just bring up gold as an example, but with all markets, you'll notice that the reason why I use a moving average is for two reasons why I'm looking for the moving average. I'm trying to see, are we far away from it or are we close to it? That's the two reasons. Firstly, are we away from it? Are we close to it? If we're away from it, that tells me we're too far away from it, because you can see inevitably what ends up happening, right? We end up coming back to downtrends, uptrends, downtrends. We might go through a big move, but inevitably what? We come back to it. So when I'm looking at this indicator here, this one moving average, when it comes to the elastic band, right? When the market pulls to, if this is the moving average through here, actually let's do that again. Do that again, John. But nicer. There we go. Right? That's actually, and then now I'm going to bring up a good old black. Where's the black there, right? So if the market gets too far away, guess what? We're never going to come and have a snapback and then continue up, right? So it's like elastic band effect. So whenever we get in a uptrend, whenever we get too far away from the moving average, this is now a caution bell to say, don't be going to do what you want to do. So if you look if this market's in a downward trend, yes, it's in a downward trend, and we want to trend as your friend until the end. Yes. But what you want to be looking for good entry points, right? So trying to short it after it's gone down, wait for the reset, right? And then go down, wait for the reset, and then go down. See what I'm saying? And even in a very big bull market, where we are right now with gold, look what happened. Or not right now with gold, should I say. Look what happened back here, right? We went up for a while, and we never got what? The correction, up. And then we started to change to trend again, right? So that's why trading is always monitoring the trend. Are we changing trend or are we continuing the trend? And that's trend analysis. But looking at this level here, to me, if we get too far away, if I see we've been making a very strong move up, like here, and we get too far away from it, inevitably we're going to go through one of these phases. This is expected here, right? You're going to expect this. This is the reason why I got out of my gold position, because I expected a period of time where it just had this correction, a pullback. I knew it was coming. So for you guys that will follow me at the start of the year, I took this trade, but I knew inevitably the market's going to go through one of these phases again, right? Which is one of these rebuilding phases. And then eventually it's going to have enough time to refuel to get going again, right? So to me, I'm always looking to take trades. And the reason I'm always looking to take trades when the market's right around the moving average. Because if we get too far away, either up or down, guess what? It's likely to come back to it, right? So for me, so right now through here, this is when I actually traded gold here. One of the reasons I did trade gold through there, utilizing this technique, was what? I utilized this technique in order because I knew, guess what? Firstly, we've gone through a correction, a sideways phase, which is a rebuilding phase. And secondly, we're right near the moving average. So that told me that, guess what? Now's a really good time to be looking to get at this because we're coming off a refueling phase or a counter trend. And also we're right near the moving average. But then obviously also we have these other rules in place like trend analysis and going with the trend. And because the trend was, as you can see, the trend was up through here. So I was going with the trend and all that sort of stuff. But this section here of this video here, guys, is all about making much better smart decisions by understanding how the markets work. This is how markets work. So when you're in a position like I was, getting ready to get out because you go, okay, this is what's happening here, right? And so this whole period through here, guys, is all about helping you utilize this here to stop you from getting into bad trades, because if we're too far away from the moving average, it's a bad time to be getting into it, because we're likely, there's a big probability we're going to start to see that correction, either up or down, that's going to bring it back to the actual moving average.